Welcome to Elevate eCommerce, the podcast where we take your e-commerce game to the next level. I'm your host, Eva.guru, and together we'll dive into the latest strategies in Amazon and omnichannel advertising, explore the future of e-commerce, and chat with fascinating industry experts on everything from A to Z in the e-commerce world. Tune in for practical tips, transformative success stories, and inspiration to elevate your business to new heights. Welcome back to the Eva Elevate e-commerce podcast. I'm your host, Mayana, and today we have an exciting conversation lined up with a true leader in the e-commerce funding space. I'm pleased to announce that Eric Youngstrom, the CEO of Onramp, a company that's transforming how brands access funding to accelerate their growth, is going to join me today for a conversation. Here at Eva, we work closely with passionate e-commerce brands to scale their businesses using AI-powered analytics, ad spend optimization, and our free DSP management. As a fellow partner in scaling businesses, we understand the importance of capital to fund growth. So today we're going to talk about how funding combined with advanced analytics and advertising strategies can propel brands to new heights. So without further ado, please welcome CEO of Onramp, Eric. Eric, can you start by telling us about Onramp and how it's revolutionizing e-commerce financing?
Sure. Thank you for having me today. Look, we're here to make sure that e-commerce business owners have the capital necessary to keep the flywheel of their business turning over, which is really ensuring that they always have inventory in stock, that they can afford to, or that they have the cash on hand necessary to drive the advertising to turn that inventory over, and that the shipping and fulfillment expenses are covered, and that the cash is available for that. So there's a lot more to running a business than just those three things. But if those three things are taken care of, then you can go solve all those other business problems. And so, our real purpose in life is custom fitting working capital financial solutions for the e-commerce industry. We only work with e-commerce business owners. We really only work with small business owners. Our goal is to make sure that where banks won't step in to provide these tools, that we can provide these tools, and that what we're doing is working with them in a way that is very kind of software first, right? Where software companies optimize around how do you get the friction out of the system so that it's incredibly easy to use the tool. And what we've built is a very, very low touch, low friction financing product where you can literally get connected. Takes a little time for your data to download, but with about 5 minutes worth of work on the merchant's behalf, they're going to know within a couple of hours if they're qualified to borrow or not. And then if they are, we do the hardest steps last, which is once we know that, there's money available for you and you're interested in taking it, that's when we actually do the KYC steps, right? So we actually put last what a bank would put first, right? You walk into the bank, you want to open an account, see if you can get a line of credit or a credit card, give me your ID. We do that last here. We let the data speak for you. You will, connect your Amazon or Shopify store, you'll connect your bank, right? But with those connections, we can actually ascertain, the viability of making an advance to that merchant. And then, we'll have them do the hard parts last if they want to take the money. If they don't, then, no skin off our back, no skin off theirs. We've minimized the pain for them and hopefully give them some answers that they didn't know about before.
That's really awesome. And so from my understanding, Onramp funded businesses see an average of 73% growth in just 6 months. So seems like you have kind of a secret sauce. Can you speak more to that?
Sure. No, look, it's exciting to watch these businesses grow. And I think the challenge that most small businesses have is they don't have access to the capital necessary just to keep up with the demand that they're finding. And so that's what we're here for. So prior to Onramp, I helped start a company called Shipping Easy. We provided an order aggregation engine, right? A SaaS platform where you could log into our website and see all your orders from wherever you sold online, and then ship those orders with any carrier, and with a bunch of automation rules, right, that would ensure that you could automate most of that process. Here at Onramp, right, we're taking all those learnings, but building a financing product for it. And one of the things we'd seen at Shipping Easy, and we were acquired by Stamps.com, and I saw this across the Stamps portfolio, merchants wouldn't ship the next order because their credit card was maxed out. They literally didn't have the $7 to pay for a shipping label for a order that was going to, send them $100 in a week. And it just seemed really silly that there aren't tools for that, especially with all the data about the merchant's business performance that comes out of their Amazon account, their Shopify account, their FBA account, that then allows us to make some really good decisions and be really, really helpful to just make sure that the orders can keep turning, right? That you can ship that next order, and shipping it right, you get the revenue for that order. That revenue then means, right, you're not just covering the cost of the order, but you're now contributing to your other operating expenses and running a healthier business. And what was really apparent was just there's a real lack of capital for this space. Starting an e-commerce business is not typically, call it less than 5% of e-commerce businesses are venture backed, right? They're not raising venture capital. Sadly, most of us don't have very rich uncles who can come help finance a business. The banks, right? You need audited financials and you need strong tax returns. Those are typically not things that are available to e-commerce businesses for their first several years in business. And what we found was a way to actually go help those early stage merchants where we didn't have to require all those different kind of sophisticated financial tools that they're just not equipped with today. They will be, right? They're growing. As they grow, those types of tools become available. And in fact, the business requires you to get more and more sophisticated, and we're here to help you on that path. But today, if you're not bank eligible, you're not VC eligible, really your only funding mechanism is your credit card. And that's a personal card based on your personal borrowing and credit capacity that doesn't understand what your business is doing. And what we can see is, last month you had 10,000 in sales. 6 months from now, you're at, goodness grief, you're at 20,000 a month in sales. Well, okay, great. Your Onramp line is doubled because the sales have doubled. On average, our customers are tripling in less than 2 years, right? Wow. So, and because of the way we structure our facility, we're seeing that data, right? We see your order data every day. You're sharing it with us. And so last month you were at 10,000, and would say we made you a loan for, for $7,000 over 90 days. By the time you get to the end of that 90 days, if you're doing 20,000 in revenue, that next loan is now going to be a $15,000 or $20,000 eligible line. Because the demand is there. You've proven you can capture those orders, service those customers, make them happy, that you're bringing them more and more of them to your products and you're selling more. And, we're going to adapt to that in real time. We also then, we look at things like your seasonal performance. So we know like this time of year, it's Christmas, right? Well, 80% of e-commerce is really seasonally tied to Christmas. And so for those businesses that have that Christmas seasonal lift, back in August, we were giving them much, much larger lines because they were going to need more inventory for Christmas. The gardening guys didn't need it in August, but they're actually beginning to take it now because they're getting ready for February, right? February and March is when that big spike hits for them. And so we're looking at all that data, and, we're leveraging, 13, 14 years of building software tools specifically for e-commerce SMBs, and trying to go optimize so we can just help more of them be successful.
Wow, that's a lot of really valuable information and input that you guys provide for your brands. And I imagine that it also comes with a significant amount of experience to vet which brands you kind of know are going to grow that you are going to fund. So obviously you do a good job of selecting the brands that you work with, and have a good vetting process. But you mentioned traditional, financing doesn't kind of fit into the same cash flow cycles as e-commerce businesses do. And can you speak to how Onramp's daily sales-based repayment model helps brands stay agile even during those slower periods?
Yeah. So, well, one, we do daily, weekly, or every other week payments, and we kind of optimize that for the business. I'd say our customers typically prefer the weekly. It just seems to work best for them, and we're happy to be flexible around that. The reason we do that is as you're selling the inventory, the revenue for that sale is showing up within a few days, right? And so this ensures that you're paying down the facility, which is really important, right? Because let's take the counterfactual first. When sales are accelerating, inventory is selling faster. You need to pay down the facility because you're going to need more money sooner to go buy that next batch of inventory. Now, the counter is true as well, right? If sales are decelerating, then you're going to pay slower, but you're not going to need to replenish inventory as soon. And so what we're trying to do is align this where when a merchant receives cash to their bank account, they're making a payment to us, so that they know, right, that, hey, they're bringing that line down and more is going to be available when they need it. But that we're also recognizing that, every business has, peaks and troughs. And as you're moving through one or the other, the last thing I want to do is have a big payment due when you're not having many sales, right? That's a traditional lending model, right? Like, hey, you just have to make a $10,000 payment every month. Well, what if sales have gone from 20,000 a month to 10? Like that's not going to work. And so what we're trying to do is align with that so that we're never putting that merchant in that pinch point.
That makes really sense, and it sets brands up for longevity and kind of a realistic, they always say growth is not linear. So
Right.
it's, it applies to every aspect. So it's kind of helping brands stay afloat even during those slower periods.
Yeah, no, look, everybody wants to see that up and to the right trend, right? But we also know that it kind of goes zigzaggy.
Mhm.
And so, when it's going down, right, you're still on the right trend line, but then, there's not as much revenue and you're not as need to pay. Let's go ahead and then optimize that for the business so that they're not feeling that then. And when it goes back up, right, we're going to be with them there through that experience. And we're structured in a way that's okay. So if that 90-day loan takes 120 days, all right, 150, that's okay, right? We work with that. Sometimes those loans pay back faster, and then we work with the merchant to rebate fees and whatnot, so that that we're reflecting the time value of the money that they borrowed and helping them optimize the expense as well.
That's so awesome that you guys kind of have the foresight to do that and to work with these companies. So at Eva, we help brands optimize their profit margins through AI-driven tools and strategies, as you know. And how do you see OnRamp's funding working in tandem with those initiatives like ad spend optimization or inventory management?
Yeah. So look, you have to have good tools to go manage your ad spend, to go manage your inventory, right? You need to know, when do I replenish inventory? Depending on how big a business you are you running inventory in your own warehouse? Is that a 2,000 square foot facility? Is that a 200,000 square foot facility, right? Bigger facilities then is almost, hey, it's not just, do I have inventories? Where in the facility is the inventory, right? And they've got, 1,000 units that are ready to ship right now, but I got 10,000 that still have to be broken down and in a ready to ship state, and I need to track that. And so it's shipping easy. We built similar inventory management tools around that. So using those tools is critical because OnRamp's, what we're doing with financing is making sure that when your inventory replenishment tool tells you, hey, you're going to be out of inventory in 4 weeks, your supply chain time is 3 weeks, it's time to order. That then the cash is there to allow you to place that order, right? So that's what we structure around. So the goal is, hey, we're helping you buy the inventory, we're aligning your purchase, right? And I think any business should be thinking about this, right? There's a cash conversion cycle that e-commerce runs through. And that cash conversion cycle really starts with, I'm buying inventory. And so I've got to go send, let's just make some big numbers here, $20,000 to buy 10,000 units to the supplier. And that supplier, they're in St. Louis. My business is Dallas. It's going to be 2 weeks before it gets here. Then I need 2 or 3 days to break that down before I can start selling it. Let's just say it's 3 weeks from my order where my cash went out till I can actually start selling that inventory that's purchased. In theory, right, you've got existing inventory that's selling right now while that new batch of inventory is coming in. You want to optimize that, right? You don't want to buy more than you need, especially not if you sell things that can go stale, right? Because then you're holding on to that stale inventory. And then when that new batch arrives, you keep selling that through. Well, now all of a sudden, hey, great, my advertising is working better. Eva's helping me with that, right? We're actually figuring out that these ads perform better than these ads. We're optimizing the spend. We're now seeing our conversion rates go up, right? We're optimizing for cart abandonment to reduce those numbers, right? Which is then getting more orders through the system. Well, okay, great. Now your sales are accelerating and that inventory is selling faster, right? By the way, you might have additional inventory in stock. Hey, I could use a few extra dollars to go then push more ads to move that inventory. Well, that's what working capital is. And so what we're trying to do, right, is make sure that the working capital need aligns with when do you need to buy inventory? When is it available to sell? You know, working capital isn't about ad testing, right? Hey, I'm going to go figure out these new campaigns, or I'm going to go launch this new channel. Right? That's investment dollars that the business owner needs to deploy. But I've got my Amazon and Shopify business running real well, right? And I know there that, 7% of my sales are just the pay-per-click advertising. So great, let's make sure that 7% of sales is there to drive that pay-per-click advertising. And if you can do, increase that volume by 20% over the course of a month, phenomenal. Now you want to go launch TikTok shop. Well, great. You're going to spend the first month or two using owner dollars, right? Kind of figuring out what is the methodology and how are the sales. But once those sales starts coming through, we can see those, right? And then what you want that to become is now that's part of my working capital cycle. And then great. Well, now you've got more sales velocity. That's growth. But that then means you need a working capital line that reflects that growth that you're delivering in the business in real time. And this is where, traditional financing products just don't do this, right? Banks are all things to all businesses and all consumers, right? And they do, what the things they do well, they do really, really well. They're not known for knowing how to work with small businesses at an early stage. On top of that, e-commerce as a small business segment is 15 years old. Shopify launched, I think, in 2008, right? So it's not like this is retail where we can go back to, 5 and dime stores in the late 1800s, right? We're still building the picks and shovels for the e-commerce industry. Eva's doing the same thing, right? You guys are building these great software tools, right? We're trying to Onramp, we're trying to go build tools here specific to this one problem. So when we have somebody who shows up with a donut shop, I'm sorry, I can't help you, right? I can't help auto mechanics. But if you sell auto parts online, yeah, I can help you run that business, right? And so can Eva. And so we're just hyper focused on doing this one thing better than anybody else in the world, right? The small business capital needs of a restaurant are drastically different than those of an e-commerce business. And so you can go find lots of guys who are providing financing tools, to e-commerce. But when you kind of dig into those tools, they're off-the-shelf products built for small businesses, but that includes dry cleaners and auto mechanics and donut shops. We think that purpose-built tools for a specific industry are the best way to go because you're going to be the most optimized and the most cost-effective for those merchants in that space. And so that's really what we're here to do, right? I think there's such a phenomenal growth in the e-commerce space. I think it's probably, I won't say it's easy, right? But in terms of new business creation, there's just huge growth, right? Because it's a very low cost of entry to go come up with a product, try to sell it online, get those early wins, then that the tools are then there for you to quickly grow, right? Shopify's built a great platform for that, right? And now you've got tools like Eva, all these other tools in the industry that are designed to really help these small businesses succeed. More importantly, right, what I love about e-commerce is you don't have to kind of build a business where the goal is, if we don't reach 10 million in sales, we're not successful. If you can generate a 20% profit margin on a $2 million a year business, you got a heck of a business there, right? And that might be enough for the rest of your life to just keep running it that way. And so I just love the fact that there's these opportunities, right, with what we're all building, right, to go help these merchants just become sustainable.
Yeah, I think it's a really important space to be in, and especially to have people that are so knowledgeable in it guiding, new entrepreneurs who don't quite understand what it even means to have a business and then even scale up to become CEO, or what they grow to what they need to be. So it's really important to have these kind of companies like Eva and Onramp to foster that growth and guide people in the right direction. So you, my understanding is you guys customize each funding offer to fit the brand's needs when they come to you. So could you walk us through like how OnRamp creates personalized funding solutions and why flexibility is key for e-commerce growth?
Sure. Yeah. So what we're doing is, you've connected your online stores with us, your marketplaces and whatnot. We're looking at that order flow data to understand kind of what your, historic sales have looked like. And we're really building a view into what the next kind of, call it 3 to 6 months of sales are going to be. We can see, the seasonal trends over time. So we understand, like, you sell children's toys, guess what? Big time of year this year, right? If you sell gardening supplies, that big time of the year is actually 4 months off from now. We're then essentially determining kind of the maximum amount and the maximum duration that we can offer that merchant before we ever talk to them, right? So that allows us to kind of say, hey, great, here's the max. Now, some merchants need the max. Other businesses are, no, I this is what I need, right? And so instead of just saying, here's your offer, we have tools that allow us to then, talk to that merchant and say, great, what do you need? And, if you think you need 200,000, but you're only eligible for 150, we'll walk you through why that is. If you think you need 50,000 and you're eligible for 150, we're not here to ask you to take more than you're ready to use today. The goal is that you're given the cash you need for the term you need, so that you can optimize the expense around it. You can optimize the spend need that you have. We have a sales team here that talks to our customers. You have an account management team that does that. And now we're actually, as we built these underwriting tools and offer creation tools in our back end, we're actually now working on early next year starting to deploy these so that the merchant borrower can start coming and customizing these offers within the software stack itself. And so if they don't want to talk to someone, or hey, it's 8 o'clock at night, your sales team's not there, I'm just going to do this myself, right? That it can become self-service for them. It just makes it even easier, and lets them work with us at their pace when they're ready.
That's awesome. And especially for people who already kind of have an understanding about it, to be able to go in and kind of look at, how you guys could help them and fit into their cash flow model and all of that.
Yeah, no, it's interesting, right? Like, money is an incredibly emotional subject, and people get really concerned around, especially the first time working with a new lender. Like, what does it really mean to work with you? How does your product really work, right? What are the gotchas? And, I think our best customers are customers where that first loan is far lower than what they're eligible for, because they're really trying to make sure they understand it. They're testing it, they're drawing the funds, they're deploying the funds, they're seeing how the payment of funds goes back. They're really making sure that, hey, now I understand this model so that I can then dial this in for my business. It's a far healthier way to do things than just saying, hey, what's the most I can get for the longest I can get? Because if you borrowed 6 months worth of working capital and spend it all in the first month on, a quarter's worth of inventory, how do you buy the second quarter's worth of inventory, right? The cash isn't there and the line hasn't been repaid. And so that's not a healthy maneuver, right? And sometimes merchants just don't know better because they're new to this, right? And it's a new product to them. And so, especially the first couple of times you borrow, like we want to make sure people are here to answer your questions, walk you through the process, really make sure you're comfortable with it. That then, if there is a question along the way, that you have somebody you can pick up the phone and say, hey, you guys thought my payment deposit date from Amazon was on Tuesday. It turns out it's Wednesday. Well, great. Let's go ahead and get that payment date shifted so that we're not trying to hit your bank account when the cash isn't going to be there for another day. So really, trying to, I think one of the great things we did at Shipping Easy was we wrapped white glove concierge service around a SaaS product. And we're trying to do that same thing with Onramp, right? Where there is somebody to talk to if you need help. There's you can email, you can chat, right? So it doesn't have to be phone, but that there's a human here, right?
So important.
Yeah, it's really important.
Yeah, I was just I joined a webinar about TikTok Shop, and they were talking about the live feature and how just interacting. It was like something like 82. I mean, don't quote me on this, but something like 82% of consumers who watch a live, that they get to ask the whoever is selling the product questions, were likely to purchase. And so
right.
it's I think that human connection, and that's something that Eva definitely takes into consideration, in spite of the fact that we are this, advanced AI platform. We really value the ability for humans to come in and help guide. So I think we're definitely in alignment there with the importance of that.
You want the self-service tools for those who have become comfortable and have become experts in how you work. And you want the human touch there because there's always a wrinkle, right?
Yeah.
You're running your business. Amazon gets a trademark infringement notice and they put a reserve on your deposits, and you're working with Amazon. It's going to take 2 weeks before they start up again. Okay, great. Well, let us know, right? Call us up, and that way there aren't late fees. There aren't problems, right? We understand what's happening. We can still see the sales happening, right? It's just the deposits aren't showing up. And so great, the Bank of Amazon has the dollars, but you're doing the right things, and you just have to work through that process, right? That there's all these rules across all these different environments that sometimes, catch the innocent off guard. You work through it. A couple of weeks later, things are back to normal. You just need somebody to talk to you sometimes to help you through those things. And we've seen it, right? I mean, we've worked, the team here has been working in this space now since 2012, right? We've had, I think we've seen everything under the sun in terms of what can go wrong. And if you pick up the phone and ask us, we can probably give you some hints on, here's how you go unstick that problem, right? And get things back on track. So that's, I think there's a lot to be said for doing that.
So valuable. So you kind of get the added value of such in-depth expert advice, even just by getting funded. And it also, as you were saying, money is just such a form of trust. And so to kind of start small and grow that. So you may have kind of touched on this, but as you know, a lot of brands face cash flow challenges during peak seasons like Q4. So how does Onramp's funding model, tied to daily sales, help businesses prepare to capitalize on these high demand periods?
Sure. So, we're building a forecast, right? So the way we do that is we're looking at your trailing sales, right? Like the best indicator of what tomorrow is going to do is yesterday. Now, we also know that Christmas, there's a huge lift, right? Volume is going up as we speak, right? And really, prior to COVID, Black Friday through about the 22nd of December, hang on, right? Everything is about just keep up with the orders and make sure they ship so that that Christmas present is there on time. COVID with, the carrier struggled, right? Because of just, staffing and whatnot. Black Friday, and all of a sudden that season really started November 1st. Right now we're seeing a reversion back to the old days, but we're already seeing that Christmas volume start to show up now, right? And I think it is healthier that you actually start pulling some of those sales forward, because if you can, you're not paying for overnight shipping, which is expensive, right? And either you're going to pass that cost on to the customer, or you're going to eat that cost as the merchant. So if you can get those sales going sooner, and you're winning that Christmas business today, you're in a really good spot. We then look at our industry standards, right? Based on the vertical you're selling in, the types of products you're selling. We look at, other businesses that might be selling similar products. We're looking at their seasonal, impacts over the prior years. And we're just basically saying, hey, look, we think, your volume is going to go up 50% in November, December. And that means you're going to need the inventory for that. And that means you're going to, that's just a bigger out-of-pocket expense to go buy twice the inventory for a 4-month period of time. And we're going to go fund that, right? Again, if you're selling gardening supplies, you didn't need that money in August. You really need that in November, right? We also know that, you have to make sure you're ready to help everybody before Chinese New Year start, right? Because you got kind of a 10-day period where if you're using a Chinese supply chain, everybody shut down, right? And so if the product hasn't been shipped and on a boat before then, it's not going to leave for at least another 10 to 14 days. And it may be even longer because of the backlog that gets created there. And so we're taking all those things into consideration around when do you need money? How much do you need it for? How do we optimize that experience for the merchant to make sure that when they come in, that analysis has been done for them, right? That we already know what's there. Now they may say, hey, look, I've got this other thing going. What can we do on that? Well, that's why we have the people here, right? We can have those conversations then, and then layer that additional context in that, the data can't see because it's not visible to us. But the goal should be, right, that if everything's working, according to plan, it's just firing off as normal and great. It's August, September. This is the additional capital to get you through Christmas. You're going to need a far smaller draw in December when you're really preparing for your Q1 sales, because it's just a slower time of year, right? By definition, unless again, you're in gardening.
Absolutely. And that kind of leads me to think about, preparing for these occasions and getting the sales started sooner makes advertising all that much more important and ad optimization. So how do you feel that, or I guess just speak to how your funding kind of provides brands financial freedom to actually, put their money towards Amazon DSP and utilize that AMC clean room data and kind of prepare for those events because their operational costs are covered and their inventory costs are covered.
Yeah. So again, going back to the beginning of our conversation, right? There's really 3 big expenses that drive your working capital: inventory, advertising, and shipping and fulfillment, right? And so we want to make sure not just you have the inventory on hand, but again, if you have an average cost of advertising of 7% of sales to drive those sales, that the cash is there to spend with Google, with Amazon, right, with Facebook, with TikTok, to make sure those ads are displayed, because those ads turn into clicks, those clicks turn into purchases, those purchases turn into revenue, right? Those purchases also turn into another expense, right? 5 to 12% of the order value is typically associated with the cost of shipping, right? So especially if you're not charging for shipping, well, then you need to have that cash on hand as well through that full cycle. And so that's what we're trying to make sure is there, so that you never find yourself in a situation where I've got orders coming in and all I have are maxed out credit cards and I can't buy that next postage label to ship the product. And now I have to cancel it. And that's just a horrible experience for the customer. It's horrible for the merchant. If it's Amazon, you're risking your ability to sell on the Amazon platform. And so our goal, right, is we're making sure those working capital needs are really addressed. And they turn over very quickly, right? Let's face it, if you're having your Google ad or your Amazon ad clicked on today, right, it might take 100, well, let's probably say 40 clicks to get a purchase, right? But those 40 clicks are happening today. That purchase is happening today. The revenue from that purchase is being created today. And that sales receipt, the deposit, is going to show up in the next 7 days. So we want to make sure that's there, but that's also then why we time that model, right, on that weekly basis, because then you're paying that line down. And as that line is paid down, then you have more open, right? It's reopening, so that you can then go draw against it again to then drive the next batch of inventory, the next batch of advertising. The beauty of it is, right, as your advertising gets more efficient, well, your sales are accelerating. As your sales accelerate, your line grows. As your line grows, you can afford to then push more into advertising and capture more of that demand that you've proven exists out there, which is really why, I think it's super important for e-commerce business owners to really kind of look at that cash conversion cycle, right? It's not a 6-month cycle. On average in the e-commerce industry, it's kind of a 54 to 80-day cycle. And so if you align it closely with that, what that means is as you're getting more efficient and can capture more demand, then the eligible capital you have that you can draw upon is growing, which means you can keep up with that demand, right? So as the Eva tools are making you more efficient and you're getting more sales, great. Well, there's more capital, go get more of them, right? Until we reach that theoretical cap at which, hey, you just own the market.
Yeah, no, that's awesome. I mean, like at least with our, because we have such a kind of emphasis on the DSP stuff, we've seen like a 7.5 percent growth in ROAS. And I think that has to first start with the fundamentals being covered and your business
Right.
running properly and being able to actually have that extra capital to put into advertising. And that's like the recipe for growth, as you nicely put the 3 key points, which I think is really helpful for any seller out there to really prioritize whether they're working with someone already or not.
Well,
But
I would add one other thing to that, right? On that ROAS, if your ad spend is getting more efficient, you also have, you have another option, which is, look, I don't want to get any bigger, but now, my cost of acquisition for that next order has declined by 7%. That's 7% more to your bottom line. And so the beauty of this, right, is, look, there are people who live to work and there are people who work to live. It's remarkable to me how many e-commerce business owners love running an e-commerce business, not because they're trying to go build an empire, but because they're really passionate about coaching football for, Pop Warner for little kids, right? Or they're big into Sunday school and volunteering in their communities. And all of a sudden this becomes their avenue, which they're keeping a roof over their heads, putting food on the table, but their true passion lies elsewhere. Well, great. That ROAS improvement means that I've got more time to go spend elsewhere because now my business is running more efficiently and I'm not trying to go push for a bigger and bigger business. Now, there are those who do want to do that, and I want to support them as well. But the thing I love about working with the SMBs is you get to see people defining success on their terms. And again, I think that's where Onramp and the way we've built the product, right, and then tools like Eva and the way you all built the product, it's not about growth at all costs. It's about you defining success and using these tools to support your definition of success to get yourself to that endpoint.
yeah, and scaling wisely so that you're not, as you said, like getting 6 months worth of, funding and then blowing it all in the first month, because it just doesn't create that sustainability that I think that most of the people that you're talking about who are getting into e-commerce are looking for. They're looking for that secondary income or just something that can be a little bit run on its own. Like that's
Right.
kind of the ideal situation for any company, is that you create kind of a functioning machine that isn't all reliant on, one person scrambling to fulfill orders, but that you have like, a system in place and the support that you need and the foundations met and all of that. So another thing that is really cool about OnRamp that I was made aware of is that you guys offer full transparency on your fees, which tends to be rare in this space. Why was it important to structure your funding model with fixed fees and no hidden costs?
Well, look, interest is hard to calculate for some people. These are short-term products, and so you can convert a short-term interest rate into an APR, but it's actually the wrong measure. What we had seen a lot of traditional off-the-shelf finance people do is actually say, hey, look, let's just make this simple. You have a 90-day cash conversion cycle. We're going to give you a year's worth of working capital. Well, but hold on. I can't spend 75% of that for the next 90 days. And then 50% of it can't be spent for 180 days, and the last 25% can't be spent for 270 days, yet I'm paying an interest expense on that, right? I'm carrying that. So that compound interest, all of a sudden, while it may be it may be a 22% interest rate, right? Interest rates are high right now.
Mhm.
That actually, because of the compounding effect of that, creates a very expensive product, right? If you borrow $100,000 where you only needed 25,000 for this quarter, at the end of a year, it's about an $18,000 total interest expense. If you borrowed 25,000 from Onramp 4 times this year, it's going to be a $10,000 fee. And so now our APR looks higher because you're paying it back faster,
Mhm.
but the actual dollar cost comparatively is, it's you're talking kind of $8,000. So what is that? Kind of a 50, 60, 70% savings. Excuse me, I'm doing the math wrong on that. 40% savings versus that traditional product. And then, a couple other things we do. We're really trying to help the business owner learn good business borrowing behavior. Every single lender is looking at your Experian or your credit reports, your Dun and Bradstreet if there's one. They're looking at your bank balances and your different cash on hand ratios, things like that. They're looking to see how often do you bounce a check, right? And so what we're trying to show the merchants is if these things happen, they create risk. If they create risk, we have to price for that risk. And so that we're going to have to raise the price in your next advance. If these things aren't happening and these other good things are happening, these actually reduce risk and we can bring your price down to reflect the fact that you're a less risky borrower. The beauty of this is then, while this helps the merchant work with us in a more optimal way and reduce their costs, it's also teaching them. I'm not the only guy who thinks this way, right? Every bank in the world, every lender in the world looks at this, right? We're using different data feeds, maybe different risk scores and risk models, but we're looking at these same traits. And so, again, the mission of OnRamp is we want to help as many small business owners as we can become sustainable and successful, right? They get to define both of those terms, right? It's not my job to define that. But in doing so, right, you're going to need lines of credit, right? Capital drives business success. And so when you need those lines of credit, the faster that we can help merchants understand how they look like a good borrower, if they're going to grow out of us, right? Hey, I'm going to build a $100 million business. I'm at $1 million today, and a year from now you're at 20 million, and you've hired a CFO. You're going to go find other ways to optimize capital. But now the 2 or 3 years you are with us, you've been building great habits that are going to see you along the way for a long time. And those great habits will be reflected in your credit reports, right? Which means the next borrower comes along and say, hey, these guys are actually lower risk. I'm going to give them a better deal. And so I think, our perspective on it is the more we can share, the more the merchant can learn. And that's part of being sophisticated and growing a more successful business. You probably see this in the advertising, in the shipping world, right? We would see merchants who, they were shipping out of a garage, and then they moved into a 2,000 square foot warehouse, right, in some light industrial park. And then a year later, they're getting a 20,000 square foot warehouse. When that 20,000 square foot warehouse shows up, a director of operations is hired, because that owner is like, hold on, this is one, I don't have the time, right? I'm going to need 5 or 6 people here. We got to have this guy here. Well, that person's bringing sophistication with them, right? And so what we're trying to do with our software is embed that sophistication so that the merchant's learning it by practice, right? And in doing so, right, it's making them safer for us, but it also is building that history where whoever they work with in the future is going to say, hey, great, you're actually a great candidate for us because of what OnRamp did with you in the past. And you've proven all of these great behaviors that then make you a lower risk borrower, and it's going to help you run your business more efficiently. In doing so, right, that merchant is becoming more sophisticated, right? They're learning how to run a more sophisticated business in a way that the financial world is going to recognize and reward them for.
Absolutely. It really reminds me of just like that, teaching a man to fish. Like, it's like you give them a fish and then you also teach them to fish. And
Yep.
that's invaluable. I think it's, like if someone just hands you a lot of cash, it's just gonna kind of dissipate really quickly, which is, I think we all know that kind of moving into our digital credit card eras, now cash feels like it can just kind of go. You're like, okay, that never counted because it never entered your bank account. So um, when it comes to budgeting, a lot of brands obviously have challenges securing funds, but then knowing how to use the funds wisely. Do you guys have a system or a model to help brands actually use the money that you provide them with in the ways that if you were to look at their brand and all of the data, that you would tell them where to put it? Or do you kind of, yeah, how does that work on your end?
Yeah, what we're doing with the merchant, and this is where those conversations come in, right? We're trying to understand, like, what are you looking for the money for, right? So if somebody comes to us and says, "Hey, I need this for payroll," hey, that's a problem. That's not what working capital is, right? Like, payroll is a function, but payroll is paid from the gross margin that you've generated off of sales. And so what we're trying to help them understand is you can't generate that gross margin if there's not inventory, ads, and fulfillment, right? Cover those three things. And then now if you're running a 50% gross margin, well, great, that $100 sale, there's $50 in revenue that's going to show up, typically 4 days after the sale, right? And that $50, then some portion of it's going to be paying payroll. So if you invert those two, hey, great, you've used your inventory funds to make payroll. Where's the money for inventory coming from, right? What are you going to do when you're out of inventory? And so that flywheel, right? If there's inventory, you can sell. If there's inventory, you can advertise. And if there's a sale, you can ship it. If you don't have the inventory, well, you don't need to go spend money on advertising because there's nothing to sell and you're not going to have any shipping expenses, but then you're not generating any revenue anymore. And so we're really trying to help the merchants understand that, and really trying to help them optimize, again, that's what the working capital cycle is. And so we spend a lot of time having conversations around that, sharing what we've seen as the optimal working capital strategies, but also reflecting that every business is different. Every business has got a different set of gross margins. Your Amazon business behaves far differently because of the way Amazon collects fees, but also gives you access to their tools than your Shopify business does. And so working with a capital provider who's not just saying, hey, I help you with Amazon, but I help you with your business. And I understand, what Amazon's impact is versus Shopify versus TikTok versus Walmart, right? Makes us, I think, a more trusted advisor. It also helps us, make sure that the capital these businesses need is optimized for the way that business is going to be turning it over the next 30, 60, 90, up to kind of 6 months. And then, is rinsing and repeating that process over and over again. I think the thing that I find the most exciting about our customers is how long they stay with us, right? Like, we really help these businesses optimize. And we've been in business now since July of 2021. And I have customers that have been with us since July of 2021. It's wonderful, right? Because
That's great.
yeah, we've filled that need incredibly well, right? We flex with them. When they need more, they get more. When they need less because things are slower, or it's, summertime and, hey, I sell winter clothes, right? Like, great. There's no reason to have cash on hand that you're paying to hold if you're not ready to deploy it today. But we also know that come September, man, those sales start taking off and the cash is ready for it because it's just a proven business at that point.
Right. And cash flow flexibility is key for subscription-based or consumable brands. So how does Onramp's daily remittance model benefit these types of businesses specifically?
Yeah. So look, we either collect on a daily, weekly, or every other week basis, and it really is designed to coincide with the different sales channels you're selling on, right? So if you're selling on Shopify, typically sales today, 4 days later, the deposit shows. And so what we're saying is, if, look, you sold $500 on a Monday, just say it's a $50 repayment of the advance you took. And that's going to be paid on Thursday because that's when those Monday deposits arrive, right? And so the purpose of that is there's no reason to go try to have you pay me when the sales that were generated haven't been given to you, right? They're still rolling through the payment gateways, right? And waiting to get deposited to your bank. And hey, the bank's saying, hey, it's, the ACH isn't going to clear till tomorrow morning. And so what we're trying to do then is just optimize that our payments are coinciding with your deposits and not any faster. Now, on average, our average customer takes, a weekly payment schedule instead of a daily. But we do have customers who love the daily. They just know that, hey, every day I get this deposit and OnRamp's already taken theirs. I don't have to worry about, is the cash sitting in my account? Is some of that does some of that need to be held for that next payment? Right. We also do fixed payments. We have customers who really, prefer to know, here's exactly the payment I'm going to make every week. And I don't have to actually do anything other than just make sure that that payment amount is there. And every other dollar over that, I'm going to redeploy in other parts of my business. And so, that's where we try to be incredibly flexible, because different people just have different preferences in how they run these things. And, we want to be able to meet them where it's going to be most optimal for them as a business owner.
That makes sense. It's kind of like like some people need like little amounts of allowance, and some people, it's a good way to set up a funding company, because everyone's relationship with money is so different, and every
Yep.
business operates so differently. So apart from just kind of covering the fundamentals of taking care of inventory and shipping needs, and kind of the daily operations of a business, a lot of Eva's clients want to explore kind of cross-platform advertising beyond Amazon. And how do you see Onramp supporting brands in diversifying their marketing channels and expanding their reach? Obviously, we address TikTok Shop, and that requires kind of a whole layer of UGC and creators. So do you find that you have some brands that come to you just kind of for that support, or?
Well, I think probably the best way to think about it, right, is money is fungible. So when you deploy your own capital to buy inventory, that inventory shows up in your balance sheet as an asset, right? Same way as cash. Cash is more liquid, but the inventory is going to be liquidated, right? It's going to be sold, and that sale converts it back to cash that comes back to your business. And so let's just assume that you're not using working capital today. You're selling on Amazon and Shopify, and you're ready to go figure out how you're going to light up Walmart and TikTok Shop. Well, you have the inventory, but you don't have the cash now. So if you come to a company like OnRamp, here's cash for the inventory. That then means that cycle, right, that you're already powering out of your own wallet for Amazon and Shopify, you've released that. And those funds are now here for you to go test your launch in these other channels, right?
Right.
What I think about a new channel, the first month of that new channel is really, it's an investment, right? And maybe it's 3 months, maybe it's 6 months, right? Depends how long it takes to kind of dial it in. But during that time, right, that's your investment as a business owner. But once that channel then starts to turn over, right, it's like, hey, I know this channel is going to deliver 200 sales a month. Great. Well, here we go. Let's go fund those 200 sales. And that's going to include the inventory, the advertising, the fulfillment. And 3 months from now, working with Eva, we've gotten that up to 400 units, orders a month. And now a year later, it's at 2,000 orders a month. Well, the beauty of that, right, is that growth is working capital, right? So the initial investment, right, figuring the channel out, really, that's kind of the merchant, that's the business owner saying, look, I'm going to go put this capital at risk for that. And we're not investors, right? So OnRamp's not investing in your business. We don't take ownership. We're not, sitting on your board of directors, right, helping you make business decisions. We're lenders. And what we'll lend against is the asset of the business. And so the existing sales channels, those are assets. New sales channels aren't yet, right? They're tests, but they can quickly become assets that then we get to layer in. And the power of our system is we understand how those things work. We understand how they cycle through. We understand your conversion cycle. And by the way, you're doing 2,000 units a month on Amazon and Shopify today. It doesn't take us long before we're like, hey, great, TikTok's now another 500 a month. But because you have these diversified channels, it's really easy to say yes to those 500, because you really know, like, look, if it goes wrong and TikTok doesn't show up, right, the US government kicks them out, right? You can't sell there anymore, right? Some crazy thing like that. Well, okay, great. You were going to sell 2,000 units a month anyway, so we get an extra 500. Well, that's going to sell in the 5th week, right? Like, great. Amazon, Shopify and Amazon are still going to move those units. And so then it makes it very low risk for us to then quickly come in and say, look, that channel it's not huge yet, but it's now performing. We're going to back that because we also know that you've got the diversification that the inventory is going to be sold, whether it's on TikTok, Shopify, or Amazon.
Right. No, that makes a lot of sense. And so now's your chance to kind of give me or give our audience your pitch as to what sets Onramp apart from some of the other, if they're curious about, funding their companies and they feel like they're eligible. What sets you guys apart from some of the other companies? And I know you addressed that a little bit and with the transparency, and we've talked a lot about it, but just kind of in one succinct phrasing of it, like how do you see OnRamp as being different?
Yeah, look, we're based here in Austin, Texas. We're a U.S. based company. We're really optimized for nothing but e-commerce success. So we've got loyalty pricing. We're built to help the merchant succeed. And, our mission is to see thousands and tens of thousands and millions of merchants being successful. And we want to be a part of that journey with them. So I think we've got the easiest to use platform there is out there. We try to minimize the amount of work a merchant has to do to work with us because it's our job to do that, not theirs. And we're going to be the fastest to tell you what we can do to help you. And we're going to be, I think, the most highly optimized to help you grow your business. I think honestly, the way you've asked these questions today has been fantastic because I think we've been through a lot of this, right, in the nuance.
Yeah, we have. I know. That's why I'm like, oh God, I hope this isn't redundant. But sometimes it's nice just to kind of rephrase something and pick it out and just have it as like a really clear answer, especially for people who are really interested to potentially reach out to you and
look, I think we've got the easiest product to work with and we got the easiest and fastest team to work with, right? So if we can help you, if we can't, you're going to know with the least amount of investment of your time. And look, if you're running a small e-commerce business, time is something you have very little of to begin with. So don't waste it anywhere else. Come in, find out. And if we can, we'll be the best partner to work with. And if we can't, we'll let you know as fast as we can so that you can go find the right partner.
Right. Or, spend a little more time kind of fine tuning until come back to you. So we're almost at the end, and thank you because we have definitely time. So so with both Onramp and Eva being focused on helping brands scale, what's the one piece of advice you would give to e-commerce businesses looking to grow quickly and sustainably, just as a final little ode to the listeners?
Default to action. The faster you're acting and learning, the faster you're going to find the things that work and the faster you're going to work through the things that don't. And just, look, every test teaches you something. Tests that don't work teach you what not to go do again. And you're going to be that much closer to the next thing that helps make your business that much more successful. So I think I see a lot of people who, analysis paralysis, if you will, right? It's about how can I want to make the perfect answer. You want to do enough analysis to make a wise decision, but once you've kind of reached that point, the faster you're acting, the faster you're going to get data that then lets you refine what you do next. And then doing so in a way that, you got to be really careful testing Google ads and Facebook ads, right? Because it's cash going out the business if you don't have things touted correctly. But that doesn't mean you can't go in and say, hey, look, we're just going to put a budget cap, right? Here's my $100 budget cap. Let's go test this next ad. Boom. Did it work? Did it not? Right now, let's do it again with a $200 cap and let's add a variant so we get an A/B test. Great. Go learn from it, right? I think default to action is the number one thing you can do to find success.
I love that. It's kind of the anti-failure. There's no such thing as failure when you default to action because you just keep learning and moving through it. So I love that piece of advice just for life in general. And that culminates our really insightful, informative, and full conversation. So I'm really grateful that you joined us today. And I hope that all of you can take something away from that and default to action. So, work with Onramp, work with Eva, get the support you need. And I'll see you next time.
Thank you now.